Hello. So we'll be reviewing the ES session today, S&P futures. So this is the chart reading. This is about how to read the charts, the price and basing upon price and volume. That is the only way that I trade. That is primarily based on the Wyckoff chart reading process. Anyway, so we'll be talking mostly on the US session. But I'm going to quickly review the overnight session. So as you can see, it went sideways. The gray plus line is my yesterday's high. So it tried to break it, couldn't hold there, and then it broke again. It tried to test again. So you see, as you came down to the weak volume, low, a weak pullback, and then this is a good place to short because of the supply in the background. And as it comes around, tests its lows, yeah, a good place to exit around this area. Anyway, so it breaks down here around the opening low, the overnight lows. It starts going down a little bit and again holds back. So it's kind of going on sideways, right, at the end of the day. And as you can see, the European session pulls down and goes all the way down, and then the blue plus line is the 2-day high. So it tests around the 2-day high with a strong supply, and then it pulls back. Okay, so we'll be primarily focusing on the US session. That's why I went quickly. So this is Pacific time zone, so that's why you're seeing 5:30. But if you are like an EST and then you're like early morning, you wake up early. You see, as its supply comes down, you can it as it comes down, there's a volume is pretty low, and then as it comes down to the edge of the supply where a rapid downflow happened, rapid supply entered. See this one, it came up and tested close to below. It came up, tested close to below. This is kind of the lowest volume. You can see the volume, it's kind of low, and it broke down. And then of course, the test would be so yesterday's high, yesterday's low, 2-day high, 2-day low is our key level. So this is my 2-day high. As you can see, it touched here, stayed there, and then again the supply started entering slow. So demand started entering, the buying started entering slowly, right? So okay, as you can see, in the morning there's a strong demand here. The demand is the first strong demand enter here because of the volume, good strong volume, right? Around 5:30. This is still like 1 hour before the opening, US open, and it went a little bit up, but again there is a weak pullback. Okay, there's a weak pullback happening here. But is this tradable thing? Any of these bars? No, because it is not at the support. Like if I have to draw a support, I would have drawn from here, right? Because this broke. This for this resistance to be broken, a lot of volume is needed. So the next level of support is this one. Had it come to this level in these bars slowly, with the narrow bars, maybe I would have taken a trade depending on how the bars have been placed. But since it was a little bit farther away from our support, right, from this level, it is not a tradable. Okay, so the US open, right? So 6:30, what happens? So suddenly a demand appears, goes up. Again, the next bar comes down, but holds this low. Again, the next 3 bars kind of move sideways, with not much clear intention of who is winning. See these 5 bars, right? You don't know who is the actual people who is winning. Like, is it buyers are winning? Is it sellers are winning? When I say buyers, it means demand. When I say sellers, it means supply. We don't know. So we are staying in silence. Let them resolve themselves. And then what happened? Suddenly this broke. See, the strong volume, it broke the, if you have drawn this line from here, it broke this line, and then went up, right? It broke that line. So we don't trade the breakout, this thing. And where was my support, where my resistance? Because I have drawn this resistance line in the morning because it has a couple of touches. It kind of tried to hold this level, and that is the reason why I had drawn this line. As you can see, this line, as you can see, I'm looking more this to a little bit to the right side. You can see this broke down. So my thought process as it broke down is, okay, let it wait to come to this weak pullback, because this is one thing, or if not this one. These are the two levels. These are the two supports. So as you can see, it came down, and then so these two bars, see that the volume has declined compared to this bar, the breakout bar, meaning that pullback is weak. And this one, see this one, even with the low volume, it came down, touched this highs, and then closed up, closed above this support, the support line. So typically, if you are breaking this line, right, you saw this bar gets printed, and then as it's coming down, you see the volume is low. You can place a limit order around this area, like this is what 33.1850. You can put it around like one or two ticks above that, like 33.17, 33.1875, or 33.19, around that area. You can put a um, uh, limit buy order. And where is your target? This is your target, right? The yesterday's high. So when I say this plus bar, this is my yesterday's high. You can see YH means yesterday's high. As you can see, it went above this one. Like, even if you're holding this one, just make sure that as it starts coming down, you exit the trades. Do not hold the trades. Such trades, why are you, even if you're holding it, at least get out few contracts, get some profits, take some profits, and then you can hold on after that. So the next bars goes above the resistance line, and look at the volume. This one, when you see such low volume breaks, right, I'm not convinced that that it is a clean break, right? Typically, the support and resistance or have more value if it breaks with a solid volume. So again, so it breaks up, and then you see this one comes down with this good. See the volume on this one. See you can see that supply entered here, the first thing, and then the supply entered again in this bar. It broke down, and you see as it starts touching down, this goes up, goes above this line, and then it starts coming down. You can put a limit out. So this is a very risky play. I know people. There are some people who trade such trades, but it's still a readable trade, but still a risky play. Why risky? Because there is a good amount of still demand in there, and then I would want to wait. What I would have done is, like, if it was broken, if this was broken cleanly with this one, I would have waited. I would wait for the weak pullback to appear, like a small narrow bars. Like, see this how these bars come down. I would wait for the small narrow bars to come up around this area. You would take a trade around this, because this is the least our least risky position, right? However, what happened? So, but this is still tradable. You can read this one. This was not a clean break. And again, the volume came up. Volume proves that the supply is in this market, in this bar, and then as it starts breaking down, you can take a trade here, take a limit order. But again, that's a risky play. So I wait for a less risky place like this one, because after this proved himself, again I waited for the weak pullback. So what happens now? So this breaks this support, and then around this consolidation area in the morning, it tries to hold for a bit, and then volume comes up. Okay, this is still not tradable. You don't know, because this is a strong, huge supply. You don't trade, you don't go against this volume just because of one bar went down and pushed it up. This is like a train, and then this is like bike. It's like, you don't want to go head on with it, a train with a bike, right? So let's wait for that one. Let's wait for the clean entries. So what happens as it starts coming up? The first bar, it went up, and then it closed. It went above the support, and then resistance, and then closed below. Okay. Again, so am I going to take a trade? Yeah, you could take a trade even here too, because it's a weak pullback. There's nothing that's threatening, right? None of these bars are threatening. You see the volume has started declining as it starts going up. You can take a long here, you can take a short here. Somehow I was not convinced because of one reason is every bar started closing above. Like see all these bars had nice close, a nice long closing all towards the highs, right? If these bars were like closing in the middle like this, yes, I would have taken. Just because of these bars closing neatly above this thing, I wanted to wait for still some more time to get a clean day. And as you can see, this the supply came up and then came back again. When this happened, this is a good place to take a shot. Now by this time, you know that there is a strong supply, a weak buying, and then the resistance is holding, and then this is an upthrust. This is an upthrust, and then it starts coming up. Okay, and see this one, see this bar. Suddenly the volume entered here. What is this one? Demand. My target is now. So when I took a shot at my target is what? Around these areas. Around these areas is my target. But somehow the volume entered in this bar. See the volume, strong volume entered in this bar. Meaning what? It went above this one, and then meaning buying has entered, like demand has entered here. And when especially when you see such bars, right, I exit out. And if it starts coming down and with a strong volume it is coming up, I exit out. If it's a weak volume, yes, I will hold it. But when it's coming with a strong volume, buyers are proving themselves. But even if you're holding it, as you can see, this bar is another bar that is important. That is a strong volume bar, strong demand bar. Okay, and where it is happening at the consolidation area previously where the supply was held down. So the strong supply was held down. So by this time, see this one, this buying, and then this buying, these three four per buying, right? By this time, you know that supply is unable to move it further down. Like whatever is they're trying to do, they're somehow not able to do. See, because at this end there's nothing tradable, but still, you're out of this trade here in these bars in a bar. But reading this thing, the kind of bias is changing towards the sub demand side, towards the buying side. Okay, after almost like what is on 7:30, 7:40 to 8:40 time, nothing is happening, right? And the price has stayed at this level, nothing happened. That is why you know that by this time a slight bullish. This is not a strong bullish, I would say, but a slight bullish. As you can see, the next couple of bars enter. What are these bars? So these bars enter, and then every bar has a strong volume, right? But it is making slow progress, right? Grinding progress. This is kind of absorbing all the volume, all the supply that is there, right? And but it's you nothing tradable. You just stay there and then stick to that one. And what happens? It starts breaking down this one, and okay. So what happened? This one got broken. By this time, this is the key level, key support and resistance line, right? Because it held so many times. So, so how you make importance of, how do I know whether this was important versus this was important, right? Because when this got held in the morning 3 times, in the US session held in 3 times, and then this came up tested again, and then this came coming up breaking this resistance, trying to break this resistance again and again. This is typically called axis line. Axis lines are typically the price action happens around this one. So this is a good axis line, right? Or a support, counter, resistance, kind of support, end up become resistance again. So again, you see that one. This broke now. This thing kind of broke with such strong volume. It broke, and what happens now? The weak pullback happens. See this one? This is the weak pullback. When this bar appears, so you are coming back at the support, and this bar appears. Look at the volume compared to these volume, right? This is a low volume or not? And so this is where you enter the long. And where is your target? Of course, this is your target. So this is trying to break the second time, right? So again, it broke this one, and then you're out of the trade. And as it comes up again, right? So now you see this one. As you entered here, right? So because okay, now this entered, and then what happens? The weak pullback season, the weak pullback happens, but still you're under the strong resistance, so you don't know what's going to happen. Again, this bar happens. See this one, the volume suddenly comes up, meaning what, buyers came up. See this, buyers came up and then pushed it above this one. Comparatively, you don't compare this bar with morning bars. The more you compare typically with these bars, side bars, right? So this is a good volume comparatively. Try to break it. See, the volume is, the bar is also, price action is also close on towards the highs. And then next, see the next two bars, the volume decline, meaning that supply has entered. Sorry, supply is weak. So as it starts going up in one of these two bars, right, you can enter the trade. This is kind of weak pullback in a kind of, I know this can be confusing a little bit, but if you are confused and do not know what to trade, you can put a limit order above these highs. That is when you would know that, because when everything is consumed here, when it starts breaking up, you know that that is the time when you can enter the trade. So, but any of these bars are tradable because of the low volume season. It broke this thing, and then all these four bars, it is trying to hold with a weak volume. Look at the declining volume. After breaking the resistance, a weak pullback with a declining volume. Right, this is happening. And as you can see, there is nothing threatening. Just one first time a supply entered here, and then it starts consolidating around this area. It's time to get out. You don't need to hold on all this long. Again, so feel free to ask me any questions if you have anything. That's all, guys. Thank you.